Ladies and gentlemen, welcome back to yet again another episode on this channel. Yes, we're going to talk Tesla stock in this video, but a good chunk of this video is going to be about the catalyst that we have for this week. The Jackson Hole Economic Symposium, Fed Powell that's going to be speaking, and massive earnings. Guys, Walmart reports earnings this week. That's the only thing that really matters to me. Fun fact. We'll talk about this a little bit more later on into this video. But in 2007, a year before the financial crisis, Walmart was one of the first red flags you had that there was problems coming. Okay? Well, if Walmart says there's problems here, consumer is slowing down dramatically or something along those lines, then that's something to pay attention to. That is a lot more credible to me than economic data. And I think Wall Street's under the same interpretation. Like, if Walmart says things are fine, things are fine. If Walmart says there's a problem, there's a problem. So I think Walmart earnings is actually a huge macro catalyst for this market right now, especially since we have like half a growth scare going on. So we're going to get into all of this. We do have more economic data as well, and we will talk Tesla stock, my expectations for this week, later on into this video. Hit that like button and subscribe to the channel if you have not done so already, and check out that link down below in the description of this video if you want to come join the trading community and come invest in these small cap opportunities within the AI realm before Wall Street does. I've never been the guy that likes stocks that everyone loves, okay? That's to a fault sometimes, right? I had Palantir when they IPO'd at $10. I sold it like $20, $30, okay? Sometimes that doesn't work out well, but most of the time you save yourself from disaster. Just intuitively. If people love a stock, if the stock is super bullish, it's probably not a great opportunity, okay? You want to get in on those stocks at the ground floor level. That's where the real, like, change your life kind of money is made. And that is what we are actively pursuing in the trading community. One stock in particular actually reports earnings this week that collectively in the group we have millions of dollars invested in. I have $80,000 personally invested in this company. So if you want to see what it is, come get the inside scoop. Link down below in the description of this video. Everything could change this week for that particular stock. With that said, ladies and gentlemen, let's get into today's episode. We do have some events for this week as well. So starting off on Monday, you're going to get the NAHB Housing Market Index. Okay, 3-month, 6-month bond auction, but Monday is going to be a relatively slow day. Keep in mind that we had the Trump-Putin meeting, which that's what caused a lot of nervousness on Friday. There was like some hedging, some shorting, some getting rid of positions, because if Putin and Trump didn't get along, we could have woke up on Monday to additional tariffs on China. And the only way you'd be able to really react to that preemptively is to hedge on Friday. So I think that's why you've seen some of that weakness. And, well, we did not get bad news. We got really good news from that meeting, and it looks like things are moving in the right direction. So I think starting off on Monday, you could see kind of a good market to begin with. Now, on Tuesday, you get building permits, preliminary numbers for July, and housing starts. Not really the most important data. If we see upside to these numbers, that's great. I think one, upside area to economic activity that nobody's really thinking of right now is if people can start to sell their homes and buy homes next year. There's a lot of equity in homes. If you have 20 million homes that are able to be sold, let's do some rough math on that. 20 million homes next year that are sold, which I believe that would be like really bad. You could probably see like 30 million homes sold, something like that, 40 million homes sold. But let's go with 20,000 just to be really conservative. Let's say $125,000 in equity gets realized to people's bank accounts. $2.5 billion of additional spending capital in the economy just from real estate, let alone everything else. And again, logically, you could be looking at like 40 million homes times 150,000 in equity that goes to bank accounts. That could be $6 billion in additional, capital flowing through the economy next year just from housing. We'll see. Now, Fed Bowman will be speaking at 1 or 2:10 on Tuesday as well. So keep that in mind. On Wednesday, you get the FOMC minutes. Fed Waller will speak. 17-week bond auction, couple other bond auctions as well. Fed Bostic speaks at 3 p.m. But the main catalyst on Wednesday at 8 p.m. is the Jackson Hole Economic Symposium. Okay, you can see that here. Jackson Hole Symposium. We've heard a lot from different Fed speakers since the last Fed meeting. We have not heard anything about Powell's stance on this. Every time Powell gets on the podium, he kind of tries to play it really neutral. Does Powell give us a shift in his expectations for Fed rate cuts? You can see currently for September 17th, you're pricing in an 83.4% chance of a cut, 16.6% chance of a pause. That's even after the hotter CPI, hotter PPI, right? October 29th, you're pricing in a 48% chance of a second cut, okay? And a 44.9% chance of only one cut, okay? So you're technically leaning towards almost fully pricing in a cut September, cut October. December's a lot more mixed. Your highest likelihood is 2 cuts at 45.8%, the odds of 3 cuts at 34.0%, and the odds of only 1 cut at 18.1%, and the odds of no cuts at 2%. The data between now and September, in which there's going to be a lot of it still, is going to really move these odds. Really move the odds for October and December. I think it's going to take some really hot inflation numbers or really good economic numbers to not get cut in September. It's firmly looking like we're going to get a cut in September. So I think the economic data from here really is going to move those October and December odds. Inflation data, economic data, okay, all of that. So that's your Wednesday. On Thursday, you're going to get Fed Bostic. This speaks again at 7:30 in the morning. Initial jobless claims at 8:30 in the morning. Philadelphia Fed Manufacturing Index at 8:30 in the morning as well. CapEx, employment, new orders, prices paid, S&P Global Composite PMI, existing home sales, okay. Bunch of smaller data sets as well on Thursday. We're not going to cover all of them. At 8 p.m. as well, again, the Jackson Hole Economic Symposium. And then on Friday, Fed Jerome Powell will actually give a speech at 10 o'clock in the morning. And the symposium continues on. So that speech on Friday is going to be very important. It's kind of a toss-up, like what happens heading into Powell. How important is Powell for this market at this point when you have a bunch of Fed officials that are already team rate cut? I don't know. It's something we're going to have to watch. Could you get a little bit of a sell-off on Thursday heading into Powell? Possibly. Could you get a rally heading into Powell Thursday into Friday? Possibly. It's really hard to tell. And what does Powell do? Does he give you a bullish kind of flip? Honestly, I don't know. Like Powell, you'd think so. You'd think Powell wasn't, as concerned as maybe he was before about inflation, but anything's possible. You can see there is still some earnings to report, okay, for this week on Monday. In after hours, you're going to have Palo Alto, Blink, a couple of others. Tuesday pre-market, Home Depot, Medtronic, Xpeng. Tuesday and after hours, Toll Brothers, Lazy Boy, some others, Carlisle. Wednesday pre-market, Target, Estee Lauder, Zim, TJX, Analog Devices, Baidu, Futu. Wednesday and after hours, Nordson, Kadi, some others. Thursday pre-market, Walmart, Canadian Solar, Billy Buy. And then Thursday and after hours, Zoom, Workday, Intuit, and Ross. And then Friday pre-market, you have BJ's. The big ones are retailers this week. Now, here's a little fun fact for you. Back in 2007, okay? Back in early 2007, like early to mid 2007, almost a year before shit hit the fan in '08, right? Lehman Brothers was like September 18th they went bust, right? 2008. So like a year before that happened, Walmart was the first kind of indicator that things were about to get bad. Okay, Walmart reported earnings, I believe it was like April of 2007, and warned about the consumer. Stocks actually sold off that day on Walmart's warning, and then they largely brushed it off. You do not want to brush off whatever Walmart says. If Walmart says something really bad about the consumer, that's a huge red flag. Walmart is the largest employer in America. They are the largest retailer in America by far. If they say there's weakness, there's a problem. If Walmart says people are doing fine, they're not seeing much of a change, like the same old, consider it the same old, The economy's still doing fine. But if you're really someone that is concerned about the economy, Walmart is going to tell you a lot. So I actually think Walmart right now, in the midst of this half growth scare we have going on, is very important for this earnings season. Very important for this market. So Thursday and Friday are going to be the big days for this market. Again, I think tomorrow you're going to be reacting to no additional tariffs on China. That's what Trump said because of the Russia war in Ukraine. I think that's very positive. What happens Tuesday, Wednesday, a little bit of a toss-up. What happens on Thursday is decisively related to Walmart's earnings. Decisively. Like, that is the big catalyst this week. Screw Jerome Powell on Friday. Walmart is the big catalyst. Obviously, Jerome Powell is going to be important, but Walmart is far more important than Powell's opinion on rate cuts. Again, that's just my view. But if Walmart has good things to say, that is a green light for this market. If they have bad things to say, and maybe if they have like really bad things to say, huge, huge red flag. So we'll see what happens from that perspective. Again, as I've talked about on this channel before, if you look at the sentiment of markets right now, it's not good. Bullish investors at 29.9%, the lowest you have been at in months. 24% of investors are neutral, and 46.2% of investors are bearish. Like, there's a lot of bears right now, okay? A lot of bears. That's a great sign. You want to see a lot of bears. A lot of bears means, like, people are going to flip and get bullish if things go well, okay? It's like one of those inverse things. If people are way too bullish, that's a red flag. If people are way too bearish, or bearish like they are now, I wouldn't say they're way too bearish. Like, the numbers could get worse, but they're pretty damn bearish right now. That is a green flag, okay? A firm green flag. Now, the CNN Fear and Greed Index also tells a pretty weird story. The headline number here is at 64, which is greed. But what's actually happened recently is there's been a de-broadening of this market. Not a broadening, but a de-broadening, okay? Where from like the April lows, the April 7th low in our markets, there was quite an aggressive broadening of this market, or a broad-based rally from like April 7th through, mid-July. Like, May was good for the broadening, through mid-June was really good for the broadening. Since about mid-June, end of June, July, now into midpoint of August, the broadening kind of stopped. Okay, it's been a lot of big tech that has dominated this market. So you see this in greed, and then you see a lot of fear on the AI investor sentiment survey. It's just because 7 stocks have done very well. Okay, this market is actually not like greedy like that. Okay, let's just put that out there. Market momentum is greed. Stock price strength is greed. Stock price breadth is neutral. Put and call options, extreme greed. Market volatility is neutral. Safe haven demand in greed. Junk bond demand in greed as well. So I actually think, contrarian opinion maybe, if Walmart has good things to say about the economy, if Powell is, again, not like super nervous about inflation, if he's like, okay, we can start cutting rates, I wouldn't be surprised to see big tech slow down and the broadening to pick up steam again, okay? like small caps, AI, high beta, something like Tesla. Okay, some of the other stocks we invest in the trading community. Check that link out down below in the description of this video. Again, I can't make any guarantees. Anything can happen. Again, I share my positions. I am fully invested in what I say. Like, I don't just say shit to say shit. I say shit because I believe it, right? That's where I'm investing my money. That's my thesis, okay? If I'm wrong, I'm wrong, and I'll lose money. But if you guys want to check that out, link down below in the description of this video. There is no other trading community like this in the entire world, okay? Nobody is doing this. Nobody is taking these calculated high risk, high reward kind of trades while, again, targeting stocks that are not zombie companies, very high quality, high growth companies, just trading at a fraction of their peers for one reason or another. Sometimes it's because, de-SPACing process, right? Sometimes it's because, there's, I don't know, there could be a ton of reasons, okay? Retail doesn't know about them, okay? Who knows? But those are the kind of opportunities that we are looking at, okay? Link down below in the description of this video. Again, you can see here, I've talked about this in other videos, the percent of stocks trading above their 50-day moving average here at 56.6%. Again, to the point of the broadening has really slowed down or stopped. We were at almost 80%. So 50-day moving average, very short-term moving average, half of stocks are below that. Again, not a very broad-based market rally for an S&P that is nearly at, again, new all-time highs, like chilling at new all-time highs. So I think there's upside in the small caps, higher beta, maybe some even Dow names. The Dow and Russell tend to be very correlated these days. So wouldn't surprise me if you see a Dow and Russell outperformance. S&P and NASDAQ kind of take a little bit of a breather. And again, as we talked about in the prior video, I think Tesla could have a really good week this week, partially because, you fell 0.5%, then you fell 1.12%, then you fell 1.5%. You've seen some of this downside from as high as around 350 recently, 3 or 4 trading days ago, down to where we closed on Friday at about 330, in which you've only really gotten good news for Tesla, especially over this weekend. I think starting off on Monday, you could have a really strong start because Tesla is now actually raising prices on the Model S and the Model X for all trims. They raised prices $10,000, okay, just across the board, $10,000 for both models, okay? And then they're getting rid of Model 3 and Model Y, a lot of the incentives, okay, which is really going to help that margin story and boost EPS. I also think, again, as I said in the last video, there's kind of this expectation that Q3 is going to be really strong and then Q4 is going to be really bad. I don't think it's going to be nearly as bad as a lot of people think it will be, okay? So just from that alone, I think there's probably upside to estimates. Okay, so I think tomorrow could start off on a really good note. I wouldn't be shocked to see Tesla up, 3+% tomorrow. And then really throughout the week, I think Walmart's going to be big. Any news headlines that we get or updates on the Russian war or whatever Trump has to say, he did indicate that there would be big news coming out soon in regards to the Ukraine war. So we'll see what happens there. And overall, Trump's not talking about putting tariffs on China because of that conflict, which, means we should have a pretty good start to the trading week, okay? Which I think a high beta stock like Tesla that has been in a technical breakout that continues to be out of this triangle flag pattern, technically still in a technical breakout, could get that upside, okay? You did bounce off the 200-day moving average on Friday. You bounced off of the trend line here, which still looks good. And really, I think tomorrow is going to be important to see if we can hold this technical breakout. Or if we do come down for whatever reason, I don't know what the reason would be. But if we did, that would definitely be a little on the discouraging side. I think throughout the week, there's reason to be bullish on markets and to be bullish on Tesla. We'll see if we get any Tesla specific news, but hedge funds and institutions have really been getting out of short positions. They've been buying that upside exposure in Tesla, and they seem to be positioning for a larger rally to come. I like to pay attention to that. And 9 times out of 10, when Wall Street is doing something, it can tell you something, because a lot of the times they have more information than we do. With that said, ladies and gentlemen, hit that like button and subscribe to the channel. Let me know your thoughts on this upcoming week down below in the comment section. If you guys want to come trade with us as well, live in real time, every time we make trades, we send out alerts, screenshots, all of that. And again, keep in mind, I make strong statements. I have strong beliefs, okay, in the stocks that I invest in. You don't have to agree, right? I encourage you test that thesis, and you try to, prove me wrong. That's always a healthy thing to do. But I'm not a financial advisor. I'm not a financial planner. Okay? So come to your own conclusions. Make sure you understand the stocks that you are investing in. With that said, ladies and gentlemen, have a great rest of your Sunday, and I will see you in the next one.